Listen closely, for there are whispers in the wind, carrying a truth so profound it will reshape our understanding of value. We stand at the precipice of a revelation, a moment where the invisible hand of the market reveals its true strength. For too long, many have walked with blindfolds, trusting systems built on shadows, but the dawn is breaking, and with it, the undeniable light of truth. I'm Eleanor Vance, and I've spent decades observing the intricate dance of global markets, searching for the genuine heartbeat beneath the cacophony of daily noise. What I've seen unfolding in the silver market isn't just a trend, it's a fundamental shift, a powerful story of true value asserting itself against engineered illusions. It's a tale of two worlds, two prices, and a chasm that has grown so vast it can no longer be ignored. Imagine, if you will, two great cities. In one, New York, the bustling hub of paper promises and future forecasts, silver trades at a price that feels comfortable, almost predictable. Let's say around $71.80 an ounce. But then, across the globe, in the vibrant industrial heart of Shanghai, the very same ounce of physical silver, a nearly $9 difference. This isn't just a discrepancy, it's a glaring, unsustainable schism, a testament to a market that is, in essence, broken. Normally, in a healthy market, such a price gap wouldn't last for a heartbeat. Savvy traders, seeing the opportunity, would buy cheap in New York and sell expensive in Shanghai, a process known as arbitrage. Motion's 双方or promise approach. This action would quickly equalize the prices. But here's the crucial part of our story. That arbitrage mechanism, the very circulatory system of a balanced market, has seized up. It's not functioning because the physical metal itself cannot be moved. It's not about the will to profit, it's about the inability to bridge the physical gap. The West, with its paper promises, has simply run out of the actual silver to deliver. Why is this happening? Why is this happening? The answer lies in the relentless, surging industrial demand emanating from the East, particularly China. It's a demand fueled by innovation and a fundamental shift in global priorities. The solar energy revolution, for instance, isn't just growing, it's accelerating. New photovoltaic technologies are emerging, each requiring significantly more silver to capture the sun's energy with greater efficiency. This isn't just about government mandates. It's about a vast wall of savings in the East, now being unleashed into tangible, future-defining industries. The electric vehicle industry, too, is experiencing a similar transformation. The advent of new solid-state battery technologies, a game changer for range and performance, demands substantially larger amounts of silver than their predecessors. This isn't merely an incremental increase. It's an exponential surge in demand that the market was simply not prepared for. The evidence of this insatiable appetite is now undeniable, visible for all who choose to see. In Shanghai, the visible silver inventories are not just declining, they are rapidly depleting, vanishing before our very eyes. And across the Western world, particularly in the vaults of COMEX, we are witnessing massive withdrawals from what were once considered the most reliable, deliverable categories of physical silver. It's not just a trend, it's a silent bank run, a quiet exodus of physical metal, as those who understand its true value secure their holdings. This isn't a This isn't a forecast of something that might happen. It is the story of something that is happening right now. The stage is set, the tension palpable, and the curtain is about to rise on a dramatic reevaluation of what we truly understand about value. The whispers are growing louder, carrying a message that will soon become a roar. The question is, are you listening? Because what comes next isn't just a market anomaly, it's a profound realignment of value, a testament to the undeniable power of physical reality over paper promises. We stand at a precipice, staring down an unsustainable chasm, the physical silver market in Shanghai commanding a robust 80 points. This isn't just a price difference, it's a glaring, almost audacious US 9-DO disparity. This gap, my friends, is more than a signal, it's a scream. It tells us that the market, as we once knew it, is fundamentally broken. The natural mechanism of arbitrage, the simple act of buying cheap in one place and selling high in another, has utterly failed. because the very ability to move physical metal from the Western vaults to meet the insatiable Eastern demand has all but vanished. The silver isn't there, or if it is, it's locked away, inaccessible to the very forces that would normally balance the scales. The tension is building, and the stage is now set for a pivotal moment. Picture the upcoming Ghost Week, those quiet, low liquidity trading days nestled between Christmas and New Year. Traditionally, a time for reflection, for winding down. But this year, it will be anything but quiet. It's a period where the usually robust human oversight gives way to the relentless logic of automated trading algorithms. And these algorithms, cold and calculating, see one thing: that USD 90 premium in Shanghai. As the clock ticks into this Ghost Week, these sophisticated programs will be programmed to do one thing: close that gap. They will attempt to buy paper silver in New York, instantly driving its price upwards in a furious automated scramble to adjustment. This isn't a gradual adjustment, it's the forecast for a super gap surge in paper silver prices, a sudden, violent This isn't merely a price spike, it's a paradigm shift. It marks the undeniable end of the Western discount, the final curtain call for an era where paper promises could suppress the true value of physical silver. Pricing power is not just shifting, it is decisively migrating east, where genuine, tangible demand now dictates value, not speculative paper games. The old ways are crumbling, revealing a new truth. And when this realignment occurs, when paper finally catches up to physical, that US 80 per ounce price won't be a ceiling. Oh no, my friends. We are entering a phase of pure price discovery, unburdened by artificial suppression. This discovery will be driven by two unyielding forces: an industrial demand that is not just growing, but is inelastic, or is trenching the house. This is the truth that is emerging from the shadows. The time for deliberation is rapidly drawing to a close. While others may be distracted by the fleeting illusions of paper price volatility, those who truly understand are looking beyond. The window of opportunity to secure your holdings, to embrace this fundamental shift, is narrowing. The question isn't whether this will happen, but whether you will choose to be a spectator or a participant in this historic transformation. The question isn't whether this will happen, but whether you will choose to be a spectator or a participant in this historic transformation. Because make no mistake, my friends, this isn't a theoretical exercise for some distant future. This is the precipice of an immediate, undeniable recalibration. As the quiet days of Ghost Week descend upon New York, a period traditionally marked by low liquidity and automated trading, the stage is set. Those algorithms, blind to human emotion, yet acutely aware of the USD 9 premium in Shanghai, will begin their work. They will see the disparity, the broken arbitrage, and they will act, attempting to buy paper silver until the New York price aligns with the physical reality of the East. Imagine the force of a dam breaking, not with water, but with capital. This is not a gentle ripple. It's a super gap surge, a sudden, violent repricing event. The paper market, for so long the master of illusion, will be dragged, kicking and screaming, into alignment with the tangible, unyielding truth of physical scarcity. The era of paper price suppression, of synthetic promises dictating the value of real wealth, will be relegated to the dusty annals of financial history. This isn't just about a price adjustment. It's about a profound shift in power. The reins of true price discovery are being wrested from the hands of the speculative West and firmly grasped by the industrial East. China, with its insatiable fundamental demand for silver, driven by visionary projects and strategic imperatives, is now dictating the tune. The wall of savings there, combined with relentless innovation in solar technology and the explosive growth of electric vehicles, has created a one-toting Schaufkamsis. And this isn't a temporary appetite. This is a structural, inelastic demand. This is a structural, inelastic demand. Industries don't just camouflage silver and assertion. Industries don't just want silver, they need it. Their entire technological future, their economic ascendancy, is predicated on its availability. There are no readily available substitutes, and new mine supply takes years, often decades, to bring online. The visible inventories in Shanghai are not merely depleting, they are being devoured. And in the West, what we are witnessing is nothing short of a bank run on physical silver, as massive withdrawals from registered, deliverable. So, when the inevitable realignment catapults the paper price upwards, remember this, that US 80 per ounce won't be a ceiling, it will be a new floor. We are entering a new epoch, a phase of pure price discovery, where the market finally reflects actual scarcity and utility, unmarred by artificial manipulation. This is an era where the true fundamental value of silver, driven by its indispensable role in the technologies of tomorrow, will finally be revealed. For too long, the whispers of physical reality have been drowned out by the shouts of paper speculation. But the whispers are becoming a roar. The choice before you is clear. Will you continue to be swayed by the transient illusions of paper price volatility, the daily fluctuations designed to distract and deter? Or will you anchor yourself to the undeniable reality of the physical market, understanding that true wealth lies not in promises, but in possession? The window to act, to secure your position in this new paradigm, is not just closing, it is slamming shut. The time voor eenvoudig schuiver. The time for contemplation is over. The time for decisive action is now. And the price, my friends, is only beginning its true ascent. The demand is rojadas. The demand is relentless. And the price, my friends, is only beginning its true ascent. For too long, the market has been a house built on sand, with paper promises attempting to hold back an ocean of physical reality. But the tide is turning, and the forces at play are about to converge in an undeniable, irreversible surge. We stand on the precipice of what many are calling the ghost week, those low liquidity trading days between Christmas and New Year, a time when the usual market makers are away and the thin order books become incredibly vulnerable. Imagine a fragile dam already cracking under immense pressure, and then imagine the engineers leaving for the holidays. This isn't just a timing coincidence, it's a critical vulnerability. The arbitrage mechanism, that fundamental pillar of efficient markets, is utterly broken. You cannot simply buy cheap silver in New York at USD 71.80 and sell it for US 80.53 cents in Shanghai. The physical metal cannot be moved with the speed or volume required to close that USD 9 gap. The logistical bottlenecks, the depleted vaults, the sheer inability to source deliverable metal means that the traditional arb trade is dead. And when the physical arb is broken, something else has to give. So intelligent points for control masses now. This is where the automated trading algorithms come into play. These sophisticated programs are designed to detect and exploit price disparities, to relentlessly pursue profit by closing any gap they find. With a USD 9 premium screaming from Shanghai, these algorithms will be programmed to buy in New York. But they won't find the physical metal. They will instead relentlessly bid up the paper price, attempting to force the Western market to reflect the undeniable reality of the East. This isn't a human decision. It's a programmed imperative, an unstoppable force meeting an immovable object, and the object that will move is the paper price. We are about to witness what can only be described as a super gap surge in paper silver prices. It will be swift, it will be dramatic, and it will be fueled by the pure, unadulterated logic of demand meeting an impossible shortage. This event marks the definitive end of the Western discount, the long era where paper price suppression could artificially depress the value of this indispensable metal. It's important with remark for ourselves. The illusion is shattering. The game is over. You're trying now. With this shift, the pricing power, the true authority to dictate value, is irrevocably moving to the east. It's moving to where the physical metal is desperately needed, where the solar panels and the solid-state batteries are being manufactured at an unprecedented pace. It's moving to where industrial demand, driven by a wall of savings and technological breakthroughs, dictates value, not the speculative whims of a paper market. When that paper price inevitably surges past USD 80 per ounce, remember this truth. That won't be a ceiling. Questions. We are entering a phase of pure price discovery, where the market finally reflects the true fundamental value of silver. This is a market reset, a recalibration that has been decades in the making. The message is clear, and the window of opportunity is narrowing with each passing moment. Ignore the daily noise of paper bottom, the anxiety of paper price volatility. Disregard the transient fluctuations designed to sow doubt and create inertia. Focus on the undeniable reality of the physical market. Horning for the Songwerian for liberates. The time for deliberation is past. The time for decisive action, for acquiring physical silver before inventories become truly unavailable, is now. The future of value is being written, not in New York, but in Shanghai, and it's screaming a message of scarcity and inevitable ascent. The message is clear, and the window of opportunity is narrowing with each passing moment. Ignore Ignore the daily noise of paper price volatility. Disregard the transient fluctuations designed to sow doubt and create inertia. Focus on the undeniable reality of the physical market. The time for deliberation is past. The time for decisive action, for acquiring physical silver before inventories become truly unavailable, is now. The future of value is being written, not in New York, but in Shanghai, and it's screaming a message of scarcity and inevitable ascent. This isn't merely a market prediction, it's a foundational shift, a reestablishment of intrinsic value. The impending supergap surge, triggered by the relentless pressure of that USD 9 premium in Shanghai, is not just a momentary blip. It is the catalyst that will re-anchor the global silver price to its physical reality. When those automated trading algorithms, programmed to close an unsustainable arbitrage, ignite the paper market, they will do so with a force that leaves no room for doubt. The Western discount, a relic of a bygone era of financial engineering and artificial suppression, will vanish into the annals of history. Imagine a market where the value of a precious metal is no longer dictated by abstract numbers on a screen, but by the tangible, desperate need of industries powering our future. This is the dawn of pure price discovery. Instruments. The USD 80 per ounce mark, which will soon be seen on our screens, is not a peak to be feared, but a new plateau. Every dip will be seen as an opportunity, every surge a confirmation of its fundamental strength. The inelastic demand from solar panels, now requiring more silver per watt than ever before, and the revolutionary solid-state batteries in electric vehicles. This demand simply cannot be met by existing supply, a fact that paper markets have ignored for too long, but can ignore no longer. Look to the visible inventories in Shanghai, dwindling like sand through an hourglass. Observe the massive withdrawals from COMEX-registered vaults, a silent bank run on physical silver that speaks volumes. These are not whispers of speculation. These are shouts of fundamental truth. The physical metal is disappearing, moving from vaults where it was treated as a commodity to factories where it is transformed into the essential components of our modern world. This irreversible flow, primarily eastward, is the undeniable force behind silver's coming revaluation. So as we stand on the precipice of this monumental shift, understand that this is more than an investment opportunity. It is a moment of clarity, a chance to align yourself with the undeniable forces of supply and demand, The Ghost Week in New York, with its low liquidity, is not just a calendar anomaly, it's the perfect storm for this long overdue reckoning. When the markets reopen, the world will awaken to a new reality for silver. Jorge for the Hongfeng on Churus. The time for analysis is over. The time for conviction is now. Do not be swayed by the noise, the fear, or the doubt that will inevitably accompany such a dramatic repricing. Trust the undeniable economics of scarcity meeting insatiable demand. Acquire physical silver not as a speculative gamble, but as a strategic allocation, a preservation of wealth in an asset that is finally breaking free from artificial constraints. The era of paper price suppression is ending. The era of true price discovery, dictated by the East's physical hunger for this indispensable metal, has arrived. Embrace it, for the future of value is here, and it shines with the unmistakable brilliance of silver.